Hello, everyone. Happy Tuesday. Hope everyone is doing well. Good morning, Sterling. Good morning, Patrick. Thank you for putting the news in Sterling. They want to just upgrade the price to like 1,000, because who knows at this point. Yeah, I saw the firm issuing convertible senior notes and buying their own stock with it. The markets have gone to completely insane now. So you got to ride it till it ends. Got to ride it till it ends. Good morning, Mark. Good morning, Heinrich. Good morning, McRangers. Good morning, Richard. Hey, how long will Tesla go when it back tests more than the 7 day? How low will Tesla go when it back tests more than the 7 day moving average? Tesla's going to go till it does. This whole market's going to go. And the breadth is getting narrower and narrower. Have you been watching Broadcom? See, it looks like everybody left NVIDIA. NVIDIA's yesterday's news. Let's all pile into Broadcom now. Oh, boy. So, yeah, fiscal spending is out of control. Financial conditions are super, super easy. The 10-year is screaming higher. Good morning, Jacob. Good morning, John. And the Fed's probably going to cut tomorrow. So, is inflation going to come roaring back? We shall see. But even if you get a significant recession, maybe inflation is still sticky because in a recession is deflationary. But let alone disinflationary. But what if we really get that stagflation? What if we really get it? Good morning, Royal Palms. Glad everybody's here. Thank you, for Mike. Hey, Sterling, could you keep an eye out if Coco comes in? I unbanned him again yesterday. But if he gives one stupid comment, please. Good morning, Charles. I have no patience this morning. I've been getting very little sleep, by the way. So, good morning, Anissa. We'll take a look at NVIDIA. Thank you, everyone, for tuning in. All right, we had resale sales coming out. Why did I say it was mixed? Why did I say it was the headline number coming out at 0.7, consensus was 0.5. But you take out X autos and it was a miss. There's a lot of auto buying. So a lot of the retail sales, and remember, retail sales aren't inflation adjusted. Okay? But if you take out the autos, it was actually a drop. And if you start looking at the subcomponents, people are actually pulling back on food, which that's not a good sign. Year over year, coming in at 3.8%. Again, not inflation adjusted, though. So that's with inflation baked in. And we're still running inflation well above 2%. So you start stripping out that, it's not looking as good. What else? Where's my red book numbers? Where's my red book? There we go. 4.8. Red book's still holding in there. Did you see yesterday also the services, S&P Global Services PMI flash number through the roof, 58.5. So services still, that's why we could get sticky services inflation. So we got industrial production coming up, but nothing real. We have business inventories. Nothing that's really going to shake the market at this point because you got the Fed day tomorrow. We got housing information. So tomorrow we have the Fed day. So that's going to be the real driver. This morning, NVIDIA pulling back. Oh, what do you mean? What do you mean? Broadcom's down 63 basis points? What's going on? Tesla's still chugging along. Tesla's at $26 yesterday, or 6%. Everything's piling into Broadcom and Tesla at this point. Google's been on a decent tear, but Tesla's really been on the tear. Like, we're back to the buy all the calls in Tesla. Do I think that Trump is going to run up the deficit and cause inflation to rise? It's all going to be, we're still got sticky inflation separate from Trump. Now, I think Trump will hopefully he'll try to get some of this deficit, at least rein in some of the spending, if not outright cut it. I really hope they can cut it. It just depends what he does with the tariffs. If he uses tariffs as threat and doesn't really follow through with it, uses it as a negotiation point and gets what he wants and then doesn't need to do tariffs, fine. Then that's not going to be inflationary. But inflation's already been pulled forward in a lot of stuff with the PPIs because uh, companies were already front buying goods just in case we do get into trade wars and we do get inflation from that. So we've already had a little roll into it, but on longer term, it just depends. Now, if he slaps some of these tariffs on things and we get into trade wars, we could get inflation going up again. So that's where we sit right now in terms of groups this morning. We have only consumer cyclical really leading, and that's only by 34 basis points. Everything else looks like it's pulling back and taking a breather a bit today. Fed Watch. Let's just take a look right here and just double check. Still 97%. So the market's fully baking in the cut tomorrow again. Still in greed mode. We'll just refresh all these. Still in greed mode from yesterday's run up. Schiller PE. Where do we sit on that? 38.71, almost over 39. Buy it all. In terms of earnings, there's nothing. Remember, tomorrow we got General Mills. I'm just going to be watching that from an inflationary food perspective. Then after close tomorrow, we got Micron and Lennar, but again, all eyes on the Fed tomorrow. Let's see, Sterling, we have seen an uptick in car buying, but it is a completely different class of people, those with challenged credit who need a car and people writing checks. So same thing in 2009. Thank you for that information. So, by the way, this volume took over for March, took over December yesterday, so it's a roll. And you have in TradingView, it's a roll too. Now, just a little advice. I'm not going to do it for the live stream, but for my own personal stuff, I do separate analysis, like with the retracements, I do with the harmonic projections on the March contract, especially around the roll time. So you'll get a little better harmonics on it. You can use the same rough pausing points, but you'll get better harmonics. Now, updating this, we had 61.43 where we opened just above and reversed with the roll because now we're in March. And then 61.75 are the upside targets. If it keeps on marching, 62.35 to the upside. Very key support is back at 6,100. Very key support back at 6,100. So that's where that sits. The NASDAQ, just again, trading at the next harmonic projection. Then I'm using a 4-hour pausing bar to get, if we keep marching higher, about 22,677. So with the contract roll going straight to the harmonic, and then the next level, and this is a projection, an upward breakout from a wedge, which is rare, but can happen. The upward projection with the harmonic and the rising top pattern would give me this 2650 to 2700. Very key area I'd be watching for, especially tomorrow. If the market, if the Fed goes very dovish and the market just goes screaming higher. Then you got 22,930. Again, we'll dial in the levels a bit more once we get some we start trading a few days. It's also the holiday times coming up. Very key support is 22.1. The Dow, little roll gap, but what's interesting is I'm still watching for, what we closed yesterday in the December below the 62.5. I'm still going to be watching for rollover plays in the Dow. Russell, remember, is no roll yet. Russell's projected roll is Wednesday. So tomorrow. Keep an eye. Yesterday's, we traded above Friday's high, but did not close above it. So there's no follow through %B, and there's no setup. Right now, I'm looking at very key resistance on any rally about 23.80, and the support level I'm watching Friday's low still about 23.38. Other than that, not a lot of great setups. There's just not a lot of great setups right now. VIX climbing into the Fed decision tomorrow. That's not what I was talking about. Don't bring up cocoa to me, Richard, right now. DAX, by the way, DAX has potentially confirmed a double top. It's still waiting for it to trigger. This is valid. It's lopsided, but it is valid. Well, that's when it's going to roll. It does not roll today. The Russell rolls. You technically roll when volume in the next contract exceeds. It's, you don't have to roll that day. There's no day that everybody's got to go, I got to roll that day. There's windows. So that's when TradingView is going to roll. Okay, if you were in the D's contract, you do not have to roll. You could roll today. You could roll Thursday. You could roll tomorrow. It all depends on how you're trading and what you're doing. This is lopsided, but still valid on the DAX. So since it's confirmed, just pay attention because that would be a little bigger pullback pattern closer to the bottom of the rotation zone. The notes, little pause here, but coming back down, bouncing off the 75% harmonic. It was selling off, so yields are dropping a hair. They're still up overall, but it finally filled the gap. The gap left behind from the 22nd of November has finally been filled. We'll still be watching for rollover plays in the notes. Yields came up with the next harmonic 4.442 and pausing really just back to yesterday's. So we are at cycles at the top. We might be taking a breather based off the Fed tomorrow, but look where we're back in. We're back in early November range. So keep an eye that we might get in the cycle top. So I would not be surprised to at least see some kind of pause / pullback before another push higher. Also, we have weekly cycles starting to climb. The only thing overall, since it is in potential double top territory, that would change my tune on the 10-year yield is if we close below the beginning of December's lows, because that puts it in double top territory. That's the only thing that would get me to bearish on the yields. You can see the 10-2s again back recovering above this 20 basis points. Dollar index, still no traction ahead of the Fed meeting on the trigger double. So nothing more to talk about there. Pulling back, trying to get the rotation zone catch up, but very key supporters at 106.15. Crude, we did have. Now, right here, we had a double top, and then we had the contract roll in crude. So that's just played out. You could have tried to do something with that, but we've got cycles at the top, and I said yesterday I was watching for topping patterns. But again, these aren't long-term sells. Everything is scalpy in here. Right now it's back in no man's land. I'm going to watch for a continued pullback with daily cycles still here. If you're looking for a minor support level, I'd be looking right around 69.20. We can look at, hey, what, Balaji? Yeah, we can look at that. Natty gas. Still, you have the bigger double not yet triggered. That's the only thing I'm keeping an eye on there. Gold, looking to possibly break below key support, broken down from the channel. Remember, gold, we still could stay in correction mode through beginning of January. The next very key level, I put on the harmonics running up. We're trading right at the 50% right now, but on a closing basis, I'm going to be watching 26.24. If we close below that, I'm watching to possibly retest the mid-November lows. But I'm going to be watching to see how it reacts between this 26.50 and 26 424 area in case we do set up another bounce pattern. Copper, by the way, finished the little double top. You can see here the little double top triggered. First target, pause there for a bit, second and third target hit, and now bouncing right at that third target. So that's off the table too for the copper pullback. You know, we had the nice double bottom, which ran up, hit the targets, and a nice little double top. But those are only just short-term trades. Yen, I'm watching for a little pullback here, then a rotation back up and more weakness to the yen. Pay attention to the daily rotation zone on this one and the 152.70 to 152.80 area. Not much to talk about with the euro. Spiders. The double is off the table. No more double. It moved again. It came down far enough and then moved back up to put it into triple top territory. Okay, so I'm still going to be using the same harmonics. Roughly, we're looking to open at 604.57, so I'll be using 603.87, roughly then 602.90 to 603. If we did break below Tuesday to 10th low, I'd be looking at the bottom of the rotation zone. Other than that, to the upside, 604.57. So the first thing would be to yesterday's open 606 and then to the gap fill to the close 606.79. The Qs coming up to the next harmonic and closing there yesterday. We're at a very strong resistance area in the short term. So at this point, going to take the longer term harmonics and take them to the next major pausing area since we've hit that cluster. And now, if it keeps on running, you got 552.54. In the short term, I need a pausing bar. What else? Bitcoin still, marching higher. Still marching higher. Next key target on that is 112.562. Tesla. Next harmonic, if it keeps marching higher on this one, is the next key is 492.67, just closing above the 451 yesterday. Again, what is this market cap now? 1.49 trillion. Trading at 119 with projected earnings not coming in so hot. So we're going to have to see NVIDIA, but everybody's forgotten about NVIDIA. I'm really going to be focused on NVIDIA returning to the 62.5 area, well, really the 200 area, right around 116 over the next little bit. Broadcom can't even do another harmonic projection yet. It's gone completely off the charts vertical. So, I just used round numbers. If it keeps going, I'd be looking closer to 300. What else? You wanted Adobe. What else did I forget about? Did I forget anybody else's? Adobe's coming in at very, very key support. Let's flip this around. Right around here, you're trading against a 50% harmonic. So I'd be watching for any support between this 455 to 411. With the arrow I'd zoom in on would be right about 435, should it get down there. That's the key area. If that breaks, it's not much to 411, and you're into a clear path move. So pay very close attention if that breaks down, because if it follows through with the close below 411, your next major support is until 386. So this area is critical that it holds. Is there any great buy setup yet? No. I'd be watching for one to form on a daily. Let's just take a look at that weekly, because this, they had their earnings. It was a beat, but nothing significant with guidance in overly positive way. So I'd be looking again right in here for it to hold support. If that starts cracking, would not touch it. Was this a little, to see if that was valid or not? No. Daily, weekly, head and shoulders, and then that's what I forgot. I gotta look at the daily. Yeah, that could be traded as a head and shoulders. Yep. With a horizontal neckline and closed blow. So let's do the projections on it. That can be traded with a horizontal neckline I'd use. So that takes me right in. I'd be watching again that 117, the reconnection with the 200. Be taking a look at that. What else? Next major resistance level in SoFi. Well, it just hit the. Oh, I got to re-anchor it. There we go. We hit 1706 was the next minor harmonic, and it reached 1704. The next key is 1751. And let's see what the next major levels are. So those are your minor levels. The major levels. Should this keep running too? The next one would be, the next very key level would be 1793, then 1926. If so, it looks like, what's that? What was that level? 1705. So technically, it's going to pre-gap above that. So there was a potential double top, but this is going to gap above 1705. It looks like that's off the table. So the key support levels right now at 1650, and there are your projected levels higher. 1750, 1793, right in front of 18, then 1926. What do I make of the price action on, let me just see. I didn't look at pounds here yesterday. But that puts it in potential double top territory. So that's the only thing I'd be looking for from a trailing perspective. Because that could easily take it back to the fifth, and the rotation zone would be out of the way then. It's been hugging the 8. Any dips below the 8 have been bought, but if this does roll over to 21 would be out of the way too, and then it could be a quick trip to the 50 after tapping off the 81 level harmonic and a big reversal. This was a bearish move. So here's your primary reaction. The secondary reaction is set up the potential double. This closed right at the 62.5, not beyond it either. And it already ticked off the 75. So the only bearish thing I'd be watching is this key low, 68.07. You're welcome, Eric. So that's where that sits. That's another key one to keep an eye on. And you see the weekly very overextended from the weekly rotation zone. That pullback would just take it back in the rotation zone and very, very overbought. I think some of these things are going to get shocked at some point. I just don't know when. We're getting at least some potential patterns for if you were long this, where you might want to consider, if you haven't unwound something, maybe put a stop in, because these things are getting so overextended. So that's where that sits. let's just peek back at the S&P going into the open. So pullback. So again, key pullback levels. Let me update this. Key pullback levels. I'm watching, if we really pull back today, watching about 6100 to 6110 are my key pullback levels that I'll be looking at. No, I think it's just rising volatility ahead of the Fed. Rising volatility ahead of, because it's big thing tomorrow, so it tends to creep up ahead, even though it's fully baked in, at least from the market's perspective. I'd love to see Powell. If Powell had any cojones, he might say, look, inflation's starting to be a little stickier. Let's pause and see. Let's give it a break until early next year. Let's just take a 1 month pause. But if I don't think he'll want to shock the market, even though this market's been on a tear. I mean, you got your NASDAQ. Look. I mean, what? That's not weak. Look at this. That's a monthly. Just climbing. But they don't want to upset the apple cart. They want everything to be perfect. Hold the line. Yep, exactly, Charles. All right. Nothing. I'm going to just peek at the I want to see where the tick opened today, because it looks like a pretty negative opening. Yep. Yeah, all right. So what I'll be watching on is a tick bounce to see how much the S&P can bounce, and then look for some potential rollover plays. Very key resistance now is back at about 61.32, 61.31. If we continue to head down and we really break this level, I'll be watching on any bounces. 61.25 will be key for rollover plays that I'll be looking for. All right. So that's where that sits. I hope everyone has a wonderful, wonderful trading day, and I will see you all tomorrow ahead of the Fed announcement. Bye for now.